Now, let's talk about sports. To tell you more, here's Ruby.
I get the money, the bunnies all on my tail. Know how we do, how we do.
Apple stock ticker symbol AAPL reported earnings after the bell, and the street loves it. The stock is up 2.42%. Bear in mind, this is a $3 trillion company. So this is a big move for Apple right here in the after hours, and we are going to talk about it. What does it say about the consumer and what does it mean for the technology space? Let's dive in. But before we do that, if you could please go ahead, like and subscribe. It really, really helps me out. Now, you guys all know what Apple is, what Apple does. They design, manufacture, and market a wide range of consumer electronics, software, and online services. Their main product categories include the iPhone, iPad, Mac, Apple Watches, and Apple TV. They also offer software compatible with their devices, the iOS, macOS, and Watch OS. And then they have onboard services like the App Store, Apple Music, and Apple TV. They also provide accessories related to services like Apple and cloud services. So Apple's quarter, extremely good quarter if you ask me, a solid quarter when you look at the business in aggregate. Revenue jumped up 10%, earnings per share was up 13%, reporting $1.57 on revenue of $94 billion for the quarter. Can you believe that, guys? That is absolutely insane. Such a huge number, so much revenue here. And the estimates were up for $1.42 in earnings per share and then $88 billion. So, beats across the board, massive beats here for Apple. We also saw gross margins expand ever so slightly. Net income margins were largely flat over the same time period last year. But because of that 10% in revenue growth and that massive beat, we saw net income dollars increase to $23.4 billion here in the second quarter. So that was something to write home about, net income growing significantly there. And then the balance sheet of Apple remains incredibly sound. A company doing $400 billion a year in revenue. They have $98 billion in debt, a $132 billion cash pile. So a sound balance sheet, probably a little bit too much debt for my liking, but that hasn't stopped the stock from doing what it needs to do. Now, revenue was up 10% for the quarter across its products and services segments. Cost of sales was up 9.1%. Operating expenses was up 8.3%, and that's how you sort of get that 13% net income growth. You see your revenue slightly greater than the cost of sales and operating expenses. Got some operating leverage being built into that, and that's normally what happens every single quarter. Whatever the revenue number is for Apple, we see the expenses just slightly below that. The company is very good at, controlling their costs in aggregate, and that's how you get, net income growing 13% and earnings per share even slightly more with the amount of shares this company buys back on a yearly basis. Now, looking at their product categories, the America segment was up 9.3%, very solid growth right there. The European segment was up 9.7%. So it's the two biggest segments grow at a very, very solid clip, high single digits. China finally got back to growth this quarter, growing 4.3%. China has really been a drag on Apple's earnings over the last, I would say, 4 to 6 quarters. So the iPhone grew 13.4% for the quarter, and we could attribute this to potentially an upgrade cycle, potentially front running with tariffs. Nonetheless, double-digit low teens growth there for the iPhone. You can actually see growth accelerating in some of the highest growth we've seen going back to 2021 in the iPhone segment. The Mac segment grew 14.7%. And again, it could be attributed to an upgrade cycle, potentially tariffs. Maybe the tariffs got people to upgrade, saying, hey, I do need a new phone. I never felt the need to upgrade, but I am going to do now anyway, because potential price hikes could be coming in the next year and a half. The iPad and wearable segment fell about 8% in each division, so that did drag on the overall revenue. And then services up 13.2%, growing at a very nice clip for a total revenue of about $94 billion for the quarter. So a very solid quarter globally, and again, boosted by the iPhone and the Mac. It's extremely solid stuff there from Apple. Now, we got some commentary here from Tim Cook. Tim Cook said that he's very open to acquisitions. He said Apple acquired around 7 companies so far this year, companies from all walks of life, but AI companies nonetheless. And I'm pretty sure this is pretty much Cook saying, hey, we're about to make a pretty big acquisition very, very soon. He also came out and said on the earnings call that about 1/10 of the company's revenue growth could be attributed to customers pulling forward purchases due to tariff fears. Number one, I don't know how they calculate 1/10. To me, I would say that like almost all of the growth in excess of what the market was initially pricing in is probably a tariff fear growth, in my opinion, which would be about half. But that's what he says. And again, I don't know how he calculates that, but that's what he said. And then tariffs cost Apple $800 million in the June quarter, but that was actually $100 million under what the market expected. And in the June quarter, the projected costs are about to be $1.1 billion. So Apple definitely feeling the impacts of tariffs. And it does look like there's that sequential increase that the company will have to contribute to tariffs. And what's really interesting is that the US government have actually pulled in about $150 billion in tariff revenue, right? If Apple's doing about $1 billion a quarter, that's about $4 billion every single year. So is Apple, close to 4 to 5% of the total tariff revenues coming into the US? That is substantial. So Apple really feeling the impacts of tariffs in that regard. And now Apple's guidance, the company issued guidance on their conference like they always do. And I'll go ahead and read this right here. Apple expects its total revenue to grow in the mid to high single digits for the September quarter, but services growing at a similar rate to the June quarter year over year. So services looking at about 13% growth, Apple looking for about 5 to 7% growth, potentially 8%, which is what we saw this quarter. We saw about 9% this quarter. Apple expects gross margins to be between 46 and 47%, which includes the estimated impact of the $1.1 billion tariff-related costs. And then operating expenses are to be between $15.6 and $15.8 billion. So the company just growing at that mid to low single-digit clip, protecting its margins, building operating leverage. And that's essentially the thesis for Apple. You got this company that's very mature, but has a massive install base that you can monetize. And you also have that upgrade cycle that happens every 3 to 4 years that can see the company growing, upward of 10 to 15% for that year, or, maybe between 2 to 3 quarters in that specific year. And that is ultimately the thesis with Apple. They're not a big AI player right now, but we'll see if they go ahead and make some transformative acquisitions. Maybe Perplexity, maybe OpenAI, I don't know. But let's talk about what that means for the valuation of the company. Now, Apple is expensive. You're not buying a cheap stock growing at, 5 to 7%, somewhere around there. PE of 28.5, very expensive. This is next 12 months, by the way. It's like 34 or 35 on a trailing 12-month basis. EV to EBITDA is 22.5 times and a shareholder yield of 4.16% because Apple buy a lot of stock and they do pay a dividend. So this is how I see the valuation of Apple, right? If you plug in their revenue for the trailing 12 months at about $400 billion, right? Growing 5% every single year up until 2029. And then net margins increasing to about 25% from where it is right now at about 22%, right? You're looking at net income of about $127 billion. Crazy. Using a 25 times P multiple, so slight multiple contraction, and then subtracting the net debt divided by shares outstanding, decreasing 1% every single year. You get a stock price in 2029 of $227. Current stock price is $207. With 0.5% dividend yield, you're looking at about a compounded annual growth rate of 2.33%. So Apple is not a buy. A company trading at 28 times forward should not be growing at 5%. They should be growing at closer to 15, maybe 20%. Apple right here should probably trade on a multiple of 17. So it's just drastically overvalued, but Apple has such a wide moat, and it does look like the market is pricing in some form of massive upgrade cycle to maybe come in the iPhone 17 or maybe potentially the iPhone 18, and that's why it trades at the multiple it does. I think the market expects Apple to probably grow into its valuation. But when you look at the chart, Apple has actually underperformed. You can see here that we had the run up until about March. Then we had the tariff dip, right? This is the tariff tantrum lows right here. While most of the mega caps have actually gone ahead and broken their all-time highs, Apple has not. It has actually largely underperformed the technology index. With these earnings, I do think that Apple is probably going to see upward momentum, potentially taking out the highs here at like the 220, 230 level. We could potentially see all-time highs if the multiple expands, but ultimately what's really going to move this stock is probably an AI acquisition that comes in the quarter if they announce that, maybe Perplexity, maybe something like that. They have the cash to do that. That could take the stock to all-time highs, but in the year and now it's overvalued, and I do think that the stock is going to continue to churn, probably inside, this very wide range, but this quarter should help the stock move higher, especially in the near term. The average analyst has a price target of about $236. Stock trades at about $205 at the moment. A street high price of $300, a street low of $160. The average analyst has a buy rating on the stock of Apple. So look, very bifurcated. A lot of people think it's overvalued like myself. Some see value in the name. Either way, pick your poison. I think it's overvalued, but an argument could be made either way. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.